Okay, let us start. Good evening to you all, and thank you very much for joining this webinar. Today's webinar would be, the topic would be in the today's webinar would be the stimulus package announced by the government of India and the BFSI opportunity. Here what I'll do, we shall discuss the stimulus package in detail and why banking will play an important role in this stimulus package, and from that perspective, how the bank would be able to, how the bank like Axis Bank would be able to take the opportunity in its increase in business. Now, the same pattern we shall follow. That first I will take you through the presentation, and then I will share my views, and then I open it up for discussions. And after this, the recording would be posted in the group. And also, what we should do, we should right now, since a lot of digital intervention is happening, we are also creating a lot of YouTube channels. One YouTube channel where I can keep on posting videos. And also we have launched with your LNOD department in combination the asset and liability RMs and extensive programs for building up the skill set which is required to perform their job. We shall come back to you periodically regarding your support, so that you can tell your RMs and etc. to go through it, so that within a period of 4 to 5 months you have got an excellent skilled people who can deliver as per your requirement. So that is our aim, and we will keep on continuing engagement through these groups and also other initiatives. Now, if you see, the COVID-19 is basically a black swan events. Why it is a black swan? I think you can see this presentation. No? All of you can see the presentation. No?
No.
Okay.
You have to click it.
It is not?
No, you'll have to click it. I think you have just gone to the folder.
Just a minute. Okay. Just a minute. Let me share. Is the presentation showing it's opening it up?
No, it is yet to open.
It's yet to open.
But it is showing something is opening up or something. Now it is open?
No, you'll have to click it.
Now it is opened or not?
No.
Still not?
No.
Why is this? Just a minute. Let me see. Share the screen. Now you can see.
Yes, I think you just need to have a slideshow done. Otherwise, we can see.
We can see the slide now.
Okay. Okay. Now
Yeah,
you can see.
yeah, it's better. Yes, yes. Perfect now.
Okay. Now, if you see, the COVID-19 is in black swan events in true sense. When you talk about black swan events, we are talking about the events which will happen very rare, but the impact can be far reaching. Why we are taking it as a black swan events is that, especially in the black swan events, create a lot of unprecedented impact. If you see, ADB has forecasted the economic loss would be between 5.8 trillion to USD 8.8 trillion. It is May 15th report. Every day the report is coming adverse. Yesterday, all of you have seen the Goldman Sachs report, which says that Q2, India's GDP would be contracted by 45% on an annualized basis. So this is the kind of events which is happening because of the COVID-19. So it shows that the kind of impact it is having on this. And what it talks about the poverty is also with 3 months loss in income, India would have additional 35 crores millions poor, taking to the total of 62 crores. It is the ILO report in April 2020. And this number is likely to increase, not to decrease. Unemployment increased to 27.11%, week ending May 3rd, 2020. And just today I have read it, the unemployment numbers is around 26%. And also the NPA, somebody has said the NPA is likely to increase to 20%, some newspaper report of the banking sector. So if you see, this shows the dimension of the problems. This is a very important to understand the dimensions and severity of the problem. You have to understand. And if we don't understand this, without this, we may not be able to form policies and steps which are required for under these situations. Now, if I look at it, now the COVID-19, what is the total stimulus package announced by the government? And what are the compositions? And within that compositions, how the BFSI sector stands. Now, the total package announced is 20,90,053 crores. Now, if you see the first package which is being announced is the March government package. It is around 1,70,000 crores, food distribution, MN Narega, EPF, and upfront distribution of benefits. Then what we have? Then we have the March, April, May RBI package is 5,24,500 crores. It is mainly consisting of CRR reduction, MSF marginal standing facility, TLTRO, and TLTRO for NBFC and MFI, refinance to National Housing Banks, NABARD and CDB, and 3 months moratorium, standstill clause, and DCCU extension. So this is the RBI package which RBI has announced March, April, and May, which is contributing around 5,24,500 crores. And if you include the February thing, the amount is around 8 lakh crores. Now, in the month of May 13, the first package is announced by the government under the Atmanirbhar plan. What it talks about, a collateral-free credit facilities to MSMEs up to 3 lakh crores. Now, subordinate loan for MSME of 20,000 crores, equity for MSME of 50,000 crores, liquidity support to NBFC, HFC, and MFI of rupees 30,000 crores, partial credit guarantee of 45,000 crores for NBFCs, and DISCOM liquidity of 90,000 crores. Now, if I look at it, the May government package, agricultural and micro business, which is around 3,16,000 crores. Loan to street vendors is 5,000 crores, concessional credit to KCC, and interest subvention to Mudra. Now, if we add another stage 4 and stage 5, so the total BFSI contribution is around 15,91,903 crores. So out of the total stimulus package of 20,90,053 crores, the BFSI would be contributing towards 15,91,903 crores, and this is mainly in the form of loans. Now, if I look at it here, now this is the total package. Now let us have a look at likely contribution of BFSI sector comprising of bank, NBFC, HFC, mutual fund, CDB, NABARD, and MFIs. So if you see the part 1 of the Atmanirbhar package, 5,94,550. Out of that, BFSI involvement would be 4,45,300. This is contributing around 74.77%. So what we have included? We have included the RBI intervention as well as the credit guarantee given by the government, because the bank has to lend. If the bank is not lending, the stimulus package will not go to the ground. In the case of the part 2 of 3,10,000 crores, 2,35,000 crores will come from bank in the form of a Kishan credit card and also other form of loan. In the case of the third part, 1,50,000 crores, 1,10,000 crores will come from the bank. So if you look at it, in the case of the Atmanirbhar package of 11,02,650 crores, the BFSI involvement in the stimulus package will be 7,90,300 crores, contributing to 71.67%. Now, earlier measures, which is talking about the direct credit, PM, the Prime Minister Garib Kalyan, the Yojana, and from that program, from that 1,92,800 crores where BFSI direct involvement of in the form of a lending is not there. Now, RBI measures is talking about is 8 lakh crores. What is RBI measures? RBI measures is nothing but liquidity injection. When RBI injects the liquidity, this fund is available in the system. What will happen? Bank has to lend. So that means again, here in the BFSI segment, definitely BFSI would be playing a role. Here I have to make one point. This RBI measures and the top Atmanirbhar package, some of these things are overlapping. Because why? Because here also the bank will lend, here also the bank will lend. So whatever the RBI is injecting liquidity from that, bank will lend. But why we have put it here? Because when the government is calculating 20,97,000 crores of package, we are trying to see how much the BFSI has to contribute in the form of a loan so that this stimulus goes to the market. So if you look at it, roughly around 75% of the total stimulus package, successful implementation depends on lending by the BFSI sector. So this is a very important dimension. You have to keep it in mind. Because of the stimulus package of 20,97,000 crores, 75% would be disbursed in the form of a loan through BFSI segment. And if the BFSI is not lending, then this package impact will not be there. So that's why if you see in the many cases, so overall 75.91% would be there. That's why you see in the newspaper report where people are saying it's not a fiscal stimulus. Fiscal stimulus means the government will give the money to the people or to the entities. In this case of 20,97,000 crores, the bank is giving a loan in the form of 15,90,000 crores. And this is mainly a monetary stimulus. Why monetary stimulus? The money is provided to the economy by the RBI. If we use the word stimulus, it's a stimulus. Why it's a stimulus? Because these facilities was not available this is under the normal rule. RBI relaxed the rule, and so that's why the money has gone in the system. But is it a fiscal stimulus? No, it is not fiscal stimulus, because fiscal stimulus means government will give the money to the people. So 75%, this is for your knowledge purposes. So when you interact with the people, you should always keep it in mind that this is a monetary stimulus given by the government. Now, what is the reason behind it? The reason behind it is that already India's fiscal deficit was at a higher level. The sovereign debt to GDP ratio is hovering around 61-62%. So if government borrows more and the sovereign debt to GDP ratio will go up, and this can downgrade the rating. So what government has decided to actually inject the money in the system, inject the money in the system, and through that system, what they are trying to do, they are trying to treat it as a stimulus. So there's a lot of debate is that whether it's a stimulus or not. So here I have my view, it's a stimulus. Why stimulus? Because this was not available under the normal situations. So this was made available. Second, is it a fiscal stimulus? No, it is not. It's a monetary stimulus. Third, is it addressing the demand side? Answer is no, it is addressing supply side. It is making the money available. However, there is a major point, it's contingent upon lending by the public sector banks and the private banks and NBFC. Now, if you see what is the situation right now. So this gives you an idea about how the fiscal stimulus is. Now, if you look at the data which I have collected from RBI is the reverse repo data. So the reverse repo data, reverse repo means what the bank is giving the money to RBI. So in the case of the reverse repo, if you look at it, the average for the month of January was 1,91,000 crores. And whereas in the week of May 3rd to May 10th, it is 4,70,000 crores. So what does it mean? When RBI is injected the liquidity has gone to the bank. But bank, instead of lending, bank is giving the money to the RBI. Even though when the RBI reduced the reverse repo rate, so March 27, there is a CRR reduction. If you see the March 27 CRR reductions, the entire amount of money is almost gone to RBI. So even though there is CRR reduction, the bank has not lent to the borrower. So similarly, if we look at it, the April 17 reverse repo reduction is there. So if April 17 reverse repo reduction is there, in spite of that, banks have not lent, they have given the money to RBI. So it shows that bank has become very risk averse. So even if the liquidity is injected, now this money is going to the RBI in that form. Now, if you see, this is a very important issues which is at present India is facing. So it's very clear 20 lakh rupees of fund, unless it goes 15 lakhs of 20 lakhs, 21 lakhs has to go to the people through banks. But banks are not willing to lend. Bank is putting the money in the reverse repo. It shows that there is a risk averseness is there. Unless this risk averseness is removed, so then the desired objective of the stimulus would not be fulfilled. And this can have a serious implications here. Now, if we look at under this entire framework, the MSME has come into the picture. In the case of the MSME, I want to share certain numbers. The bank credit outstanding for MSME, as per the previous definition, is the around 12%, whereas the large and mid corporate is 26%. Now, NPA is 11.30%, and whereas the mid and large is 18.7% and 19.1%. So what we can find out here is that the MSME NPA level is lower compared to large and mid corporate as per statistics shows. Now, in the case of the PSB share in micro and MSME is 59% and 49%. Now, if we look at it, the funding requirement as per my calculation for MSME, which you are talking about, MSME means previous definition of MSME. Now, GDP number is 2 lakh crores. Here I have calculated how much of the funding requirement, prudent funding requirement, where bank can fund to an MSME and loan will not go bad. One is 2 lakh crores is the 2 lakh, that is the 2 lakh crores, that is would be the GDP, that is the this is the amount, that is the 200 lakh crores, not 2 lakh crores, 200 lakh crores is the GDP. This I have got it from the RBI report. Now, contributing to GDP to the manufacturing and services is around 12 lakh 22,000 crores and 49 lakh 26,000 crores. This presentation I will share with you through our videos. Please note these numbers, because when you interact with the people, these numbers will be immensely helpful. That is how the GDP is contributing towards on this MSME and etc. Because most of the time these numbers are quoted, so you should have a very clarity on this. So sources is CII and derived. Now, many times people ask how much fund is required. Here I have shown you I have presented a calculation of that. This I have calculated is around this I have calculated on 11th of May. I gave a presentation to Tamil Nadu Infrastructure Development Corporation CEO, because one of my students is there, the Chief Operating Officer. So their CEO, there I have made the calculations. And from that calculations, what I derived is roughly around 3 lakh crores credit guarantee kind is requirement, and government has announced that on 13th. Now let us look at it how we are arrived at. Now, if you see, the salary and other cost is roughly around 15% of your total revenue. So GDP is a representation of the revenue. Why? Because whatever the SME is selling, this selling is contributing to the GDP. So if we take the GDP contribution of the small and medium enterprise as a reflection, so 15% of that would be the 61 into 15% for a year. Now, if I look at it, if there's a loss of revenue for 5 months, if there's a loss of revenue for 5 months, what will happen? So this will be tantamount to 3,84,250 crores. Because how this is basically what we say, the 60 lakhs, out of that 60 lakhs revenue, what we have to is that we have to 60 lakh crores is the contributions. So on that, 15% would be the requirement. And on the 15% requirement, the 5 months revenue, if it is lost, then this amount of funding is required. Now, RBI has injected a liquidity of 5,54,000. Assuming the same share means that this around 12%, so that the bank will not take additional risk. So the amount of fund, incremental fund requirement would be 3,36,000 crores. So what we are saying it here, the total fund requirement for 5 months complete loss of revenue and salary and other costs being 15%. So this translates into a funding requirement of 3,85,250 crores. Now, if bank gives the same like in the previous, so in that case, the 47,685 crores would be the requirement, would be the bank would be giving. Now, it means that incremental funding requirement would be 336,565 crores on account of COVID lockdown. Now, assuming 25% is the promoter's contribution, which is the prudent contributions, this reflects an additional fund flow of 250 to 492 crores. Please keep it in mind. This is on the basis of 5 months loss in revenue of the MSMEs. Now, so what it says, if 5 months there is a loss in revenue, erstwhile MSMEs would be requiring an additional fund flow of 2,52,492 crores with a promoter's contribution of 84,164 crores. And if bank can lend under this principle, the loan NPA will not increase compared to the previous level. So because why? Because after 5 months, if the SME is good, SME will come back, and in that case, it will not increase. Now, what government has given a guarantee of 3 lakh crores. But this guarantee, 3 lakh crores, is not only for the erstwhile MSME. It is the new definition of MSME has come. So what does it mean? If the government would have stick to erstwhile MSME, and if there is a 5 months lockdown continued or complete loss in revenue, funding requirement of 2,52,000 crores is coming. Now, it is expected that the lockdown will not be extended for 5 months. At the same time, since this is being expanded, the definition of MSME is expanded. So 3 lakh crores guarantee may not be a sufficient amount. So there will be slightly shortfall of roughly around 50,000 to 75,000 funding, emergency funding requirement. There can be a shortfall. What it shows that there would be a competition among the people who are asking the money and the money available. So what we can see is that there would be an process, there should be an expeditious delivery of the request should be the determining factor. Because of the simple logic here is that, because the total requirement of fund would be 3,75,000 crores, where the government guarantee is available for 3 lakh crores. This is for the impact of the lockdown of the MSME we have to figure in. Now, so if people say that how they have arrived at the calculations, you can show this calculation to them. Now, BFSI, what we should do next as a BFSI? Here, we have to give a broad macro picture. What is the macro picture? What we talk about? Domestic credit to private sector by banks as a percentage of GDP is how much percentage in India? So what we are saying it here is that domestic credit to private sector by banks as a percentage of GDP is there. Now, many people are saying here is that this stimulus package is mainly a loan package. Now, I do agree it's a loan package. I do agree it's a basically supply side package. Now, demand has to pick it up. But if you look the macros, then there may be a logic of having this package. Now, one of the parameters, if we look at it, India's as a whole domestic credit to private sector by banks as a percentage of GDP is how much? So that means how much the bank has given credit to the private sector as a percentage of GDP. it is 50%. It is in 2008 data from World Bank website. Now, in China, this number was 161.1%. So if you see the China, the domestic credit to private sector by bank as a percentage of GDP was way above India. Now, so that means the private sector has borrowed significantly more than the Indian thing. Now, if you see that post 2018 between US and China, the US and China conflict, trade conflict, some of the manufacturing companies have moved out of China, roughly around 58. Out of that, maximum amount has gone to Vietnam and second one in Thailand. So if you look at it now, I try to compare the domestic credit to private sector by banks as a percentage of GDP in Vietnam. So in the case of the Vietnam, it was 133.1%. In Thailand, it was 110%. So what it shows, India as a whole has borrowed less compared to Vietnam, Thailand, and China. So what does it mean? It means that India has the capability to borrow. So that may be the reason of the government to give the stimulus in the form of a borrowing. So from these numbers, if you look at it, you can't blame the union government of giving the stimulus in the form of a loan, because India's borrowing to GDP is lower. And if we compare China and Vietnam, it is definitely the Vietnam is a country where we can compare. And the Thailand also where manufacturing is being built up. So the question what we get is that, are we over leveraged? Answer may be no. And second is that, is it a skewed distribution? Answer may be yes. So that means why NPA is more in spite of having lower leverage? Maybe the selection was wrong. So that means the way bank used to lend, the bank lending process has to change. Because why? Because the overall leverage is in India is a lower side. So these slides, I have given my explanations that why government has resorted to monetary stimulus. So if the government can use the banking channel to flow the fund, and banks can do the due diligence and selection of the borrower properly, so the stimulus package can also flow in, and then the growth can also take place. Now, what to do now? If we look at it, now if we have to do the suggestion would be under this situation. So one thing is very clear, banks play a very important role. So what we have discussed, component of the stimulus package. Second, why this is a supply side stimulus package. Third, why it is called monetary stimulus rather than a fiscal stimulus. Four, India is not highly leveraged compared to China and Vietnam. So if this is executed properly, so this can give derived results. And we are not over leveraged, but NPA is high, so there can be selection problems. So under such situations, what we should do? Step one, the organization you are working in Axis Bank. Now, during this COVID scenario, different organization will behave differently. So in this scenario, what is happening? You have to identify your risk appetite, how your bank is identifying your risk, whether the bank is become too conservative or banks become highly aggressive. As far as private bank is concerned, the banks like Axis, ICICI, Kotak, and HDFC, they would be extremely low to low category. Somebody may take moderate as we grow forward. So that means it would be low category of risk. Now, public sector banks by forcefully has to take the high risk because government will pressurize them. But there can be an issue where public sector people may not lend at the ground level. So then the entire stimulus package may actually fall flat. So if we look at it, now we shall discuss about from Axis perspective. Axis, the risk appetite, my view is that low to not extremely low, it would be low, and to the extent of moderate, not now. So over a period of the 2 months down the line, as the situation becomes clearer, then Axis would be basically taking the moderate view. It is expected that once the June number comes up, then the people will get shocked. Because why? Because it used to show a shocker number of June GDP. But we should not be worried about that. because June number will come roughly around in July. By the time already pickup has started, so we should not get bogged down of the June numbers. So in July, August, these numbers will come in September, but we should not miss the opportunity. Now, what we look at, so differentiated approach within the organizations will help. Now, step 3, we have to take an appropriate actions. Now, what are the appropriate actions, what we are talking about? So this gives you very clarity depending on your organizations, how you approach in the overall situations. Now, next part, if you look at it, please remember your borrower has to be segregated. Uniform approach will not be there. Here the entire skill set of your team will come into the picture. Now it is a right time that Axis Bank has launched a massive learning journey for the relationship managers. We need your support also so that the relationship managers are trained periodically. We will do our bit, but without your active involvement, the learning journey will not be complete. Now we have to take a segregation approach. All borrowers cannot be treated equally. Some borrower would be classified in some other way. Some other borrower would be classified in other way. Now, when we are segregating the borrowers, there should be some objective criteria. One objective criteria can be the CIBIL score. That is called the CIBIL MSME score. This is for MSMEs, what is below in the previous definition. So if you look at it in that case, the CIBIL score comes up with 1 to 5, which indicates a medium to low risk. As per the CIBIL guidelines, on January, 63% of the MSME would be of the 1 to 5 score. So 63% of the MSME is around the low to medium score, where CMR of 6 to 10 is 37%. This is as per. So one way we can segregate the client is CMR score. Now here you can talk to your corporate office that in this presentation I have said this. It can be CMR score plus your internal rating on only CMR score or on internal rating. But some methodology of segregation of borrower is required. Once you segregate the borrower, this borrower requires 3 types of handholding. One is simple funding. What is the funding? Simple funding will be take place. Second one is that means you give the fund, the borrowers themselves would be able to come out of the situations. Another one is the not only funding but handholding. This is very important. Along with funding, handholding will also come. Since handholding means that you will help the borrower to overcome these situations. So what do? You should advise the borrowers that how to do that. You have to create a linkage. In my last seminar in the month of April, in the first week I have mentioned, you may have to do the handholding. Here, the skill of the relationship managers will come very handy. So what we are talking about here is that your relationship manager should be trained proper way so that they can also do the handholding. They can advise the clients that, okay, you sell here, you sell here, you sell here. So this is very important because why? Because all borrowers, just funding will not help them to come out of the situation. Now the last part would be the handholding plus funding plus credit guarantee. Some kind of guarantee structure would be coming into the picture. As the government has said, that is for the additional fund government has given the guarantee. Apart from additional fund, other guarantee structure can also come into the picture. For the case of the high risky clients, we can have 2 category clients. Funding would be handholding plus credit guarantee. But simple handholding will not do, simple funding will not do. So especially for the higher risky characters, my humble request is that tell your RMs to give them the handholding support also. Because this is very crucial, otherwise account can slip into an NPA. And certain category of clients, which is the fraud clients, in that case, you should not continue. It is maybe the time for exit, or you should actually reject the cases. So that can be the exit cases can be there. Now here, what we are saying here is that generally in the case of the lending scenario, we use some game theory approach. Game theory approach says that in the lending and borrowing is a game played by the 2 players, borrower and lender. Now, under these 2 players game, 4 outcomes is possible. One outcome is that borrower wins, lender wins. That means borrower is making money after taking the money and then it repays the bank. Another one is the borrower is losing, lender is winning. For example, borrower is not making the money, but borrower is paying to the bank. Why borrower is paying to the bank? Maybe it requires further fund or it wants to default at a higher amount. Now, the another part is that borrower loses, lender wins. It can be a situation that means borrower loses. In that case, sorry, borrower wins, lender loses. It's a basically promoter of the large corporate. And last one, if you look at it, the borrower loses, lender loses. Example: farmers, poor farmers committing suicide. But always remember that this is not a permanent grid. A borrower losing, lender winning is not a permanent grid. From here, borrower can move here or borrower can move here. So always remember, because of the COVID-19, many borrowers can move from here to here. So those borrowers we have to reject. But we always say that the borrower will move here to here. This is called hand-holding support is required. So if you look at it, if we do the hand-holding, then the borrower will move here to here, but the borrower will not move here to here. So this is a very important point to keep it in mind. This is the time where the concept would be tested, and the bank which will test the concept, they would be the clear winner. Now, here I will talk about the post this announcement, how you should select the borrower and where the opportunity is coming. As per the new definition of the MSME, what it talks about, investment of less than rupees 25 crores. Please mark the word investment, not plant and machinery, all investment. And turnover of less than 100 crores. So focus can be higher ticket size. So there is a possibility for the MSME, the average ticket size can go up. When average ticket size can go up, it can be both sides. One side can be the riskiness can go up. Another side is that riskiness can go down. Now, especially some of the MSMEs, which will now become big because of the manufacturing shifting in India or the focus on manufacturing side. And especially in certain states, labor law has been put on hold for the 3 years. Like for example, we have seen in the UP, we have a labor law has been there. Madhya Pradesh, we have seen the labor law, and Rajasthan also previously they have changed the labor law. So especially manufacturing unit in these states, and whoever the states is actually creating the labor law flexibility. In that case, there is a chances is that the unit can become bigger. So you can look for those manufacturing unit which may be previously not classified as an MSME, now will be classified as an MSME. There is a concept, there is an announcement has been given called e-market linkages. So what he's saying is that the MSME which is selling it to the e-market would be preferred. So focus is an e-market linkage, so digitalization of the banking. So here relationship managers has to be clearly told to reduce the physical transactions, to reduce the check transaction. So more and more digitalization of the banking will automatically cater to the need of the e-market linkages. So we should try to achieve for all our clients almost 90 to 100% digital transactions. The digital transaction which should be the way forward of this. Now, there is a scheme has been announced by the government of India which is called rental housing schemes. A rental housing scheme says that now the migrant worker, for them rental housing has to be developed. So if rental housing has to be developed, what has happened in that case, the opportunity will come for civil construction company which was doing the industrial work. Suppose a civil contractor was doing a work for setting up of a factory. Now that factory will have to build up the rental unit for the migrant workers. So the civil construction company will get an work where the payment will come from where? Payment will come from the manufacturing company. So we should be keeping an eye of the civil construction companies which were doing industrial work. So that can be a potential clients, new client, it can come. Now, this is the things what we have discussed. Now, if I look at it, affordable rental housing complex is coming up. Basically, it can be for real estate company, civil construction company, and manufacturing unit. So funding requirement will come from manufacturing unit, as well as civil construction company, as well as real estate company who can go to this PPP mode for the affordable rental housing. So these are the three segments which is giving an opportunity post-COVID. KCC loan to the tune of 2000 crores, which is coming up. So in that case, agricultural loan, there is an opportunity is coming up. Next, development of integrated system for social benefits. So what we say here, mid-size IT companies will get an opportunity. Why? Because what is happening, portability of the ration card, so many social benefit schemes are running. Now it will be converted into one. And for that, World Bank has already sanctioned a project of the limit of $1 billion. So we should keep and watch that whether mid-size IT companies are bidding for the project or not. So you should, if your IT clients are there, especially here, your liability relationship managers plays an important role. Why? Liability relationship managers, they go for the high value current account. Many mid-size IT company may be having current account. As we have discussed, we should target the focus area from where? From the STPI list, we can find out the software companies and we can focus. And from that focus approach, we can talk about that what is our potential client list we can prepare. Now, Agri Infrastructure Fund for farm gate infrastructure. So please remember 1 lakh crore has been allocated for that. So infrastructure companies and cold storage development will take place. So you should be getting in touch with the farmers producers organization called FPO, which is a success story. So this FPO can create cold storage now. And since the APMC, Agri Product Marketing Committee, the committee has been abolished. So what is happening? Direct linkage can take place and people can sell it through e-mandis. So we expect the lot of activity in the cold storage development and also in the logistic companies. So logistic setting up post APMC abolitions, corporatization of farming, what we can take up. So logistic company and contract farming, there would be an opportunity. Here, the linkage between the large corporate division of the bank and the commercial banking divisions can play an important role of selection and getting the opportunity immediately. Commercialization of the coal mining and other minerals has been announced. So here we can get an opportunity for mining equipment and contractors, especially who are working in the mining department. There's an opportunities are there. Now, in the case of the borrower segmentation, defense sector privatization is also announced. So auto ancillaries can also diversify into this defense sector privatization. So we expect, so we should keep it in mind is that whether auto ancillaries are diversifying into that. Social infrastructure funding to VGF, especially in the case of the viability gap funding is there. Here, infra companies will get an opportunity. Now, commercialization of coal mining and other minerals, where mining equipment and contractors related to mining equipment will get an opportunity. So if you see, this is the area where you get the newer businesses. Now, affordable housing company, Krishan. Now, healthcare companies. What is the healthcare companies? If you look at it, healthcare companies would be the PPE product, sanitizer, testing kits. Chemical and pharmaceutical companies, opportunity would be there. We are seeing some of the textile company is also doing the PPE. So what is the mask is there creating? So you have to see that people who are going into sanitizer, chemical, pharmaceuticals, and some of the textile companies will also be there. Next, consumer durable and FMCG manufacturing. Here, what is happening? Consumer durables and FMCG manufacturing, they are going for automation in manufacturing. So people in many of these consumer durables companies and multinational companies, they outsource. When they outsource, they are now will be trying to use automations. Through that, they want to reduce the human people. So that's why through automation, we can expect the automation part plays an important role. So some kind of funding requirement from that will come. So definitely agricultural food storage machinery, there would be demand will come. So, so food storage machinery demand will come. So if you look at it, the segments where we can expect the demand to come is first is that healthcare. Second, consumer durable and FMCG manufacturing, where automation for manufacturing will take place, agricultural, food storage, cold storage, equipment we are doing the cold storage, contract farming. Then if you look at it, the textile company may go into PPE, that is the N95 mask manufacturing and etc. And also we can expect infra companies for the affordable part we have to see. That means the rental housing schemes. Apart from that, we expect that some of the manufacturing unit may shift in India. So we have to keep a close watch and aware. We should be closely working with DIC, District Industrial Centers, about this particular, if any industry is moving here or not. Now, what I do here is that now I will actually stop the presentations and now we will take the questions. This is a small presentation. So what I have tried to do here is that an important overview about what is the stimulus package and why is the opportunities are there. Now I will open up for a question. So please feel free to ask questions. Yes, please. Please come forward and ask questions.
Hi, Chidanand here.
Yeah, Chidanand, tell me.
Just wanted to understand now when we're talking about this government guarantee scheme coming down, is the focus primarily on customers who already enjoy credit facilities, or we expect this to even get into manufacturers or industries where they do not avail any credit facilities also? I mean, how does this gonna pan out?
Okay, now the government has announced this 3 lakh crore credit facility. This is only for the people who has an outstanding on 28th of February. So whatever the outstanding is there, on that 20% additional fund they will get. For that, the government will give the guarantee. Okay?
Okay. Sure.
Okay. Yeah. Please ask questions.
Yes, sir. This domestic credit to private sector by banks to GDP ratio. You said it is 50% for India and 131% for China.
Correct.
So our GDP is roughly 3 trillion. So how does it compare?
No, if you look at this, Chinese GDP is now, Chinese GDP when it was around 3 trillion US dollar, at that time also their ratio was around 115%. So at $3 trillion, India's private debt is lesser compared to China. China is now around, I think, $7 trillion.
Yes.
So if you look at it, India as a country is not highly leveraged, but it is skewed. So that means the large companies which have borrowed more, they have defaulted. So maybe it's a selection problem.
Okay.
Okay. And others, please ask questions.
Sir, Saurabh here, sir.
Yes, Saurabh, tell me.
Sir, recently last 15 odd days or 25 odd days, there has been mixed opinions as far as which one we should focus as far as this healthcare products is concerned. Because apart from textile, generally in the companies who are below, suppose say 50 crore turnover, there are many companies apart from textile also who are venturing into making of sanitizers, automatic sanitizers machines, right? Sanitization of vegetables is taking place at municipality and corporation levels. So a lot of machine making is coming up. A lot of automation is also coming up as far as health and hygiene is concerned.
Correct.
Now, sir, there are many people who are venturing into not only into the manufacturing of these machines, but most of them are venturing into a short-term trading of these machines. I am calling presently this short-term because very few I foresee that that it will be a long-term. So, so should we focus on these traders, or we should only go towards the manufacturers?
Now, if you see, for the case of the traders, you have to take a slightly risky is there. Because why? Because the traders are talking about is that they will be buying machine and selling machines, correct?
Yes.
But it is very important. This COVID-19 will change the behavioral pattern. So what will happen if you take the proper precautions for the trader also, a normal credit assessment and etc., it should not go bad. So especially which is going to the manufacturing and trading, both you can focus on that. Now, what is the opportunity coming to you is that you should, some of your customers, which is not your customer, they will not get fund from the banking system, but they may be a good customer. So for that you can approach. Okay. And immediately, because bank has become very negative. So under these situations, definitely you can approach and take the proper immediate actions.
Okay, sir.
Okay. Yes, it's a very good point he has raised. Yeah. Yes, please. We expect more questions.
Yeah, good evening, sir. Atul.
Yeah, tell me.
Sir, what would be the effect on the infrastructure and construction sector?
No, if you look at it, construction sector, my personal feeling is that construction sector, there would be labor shortage, correct? Because the chances of labor shortage are there. So this is the time where some of the construction companies may automate their productions, especially in the construction sectors. What we'll expect, construction sector gradually it will come back. But before COVID also, many construction companies were not doing well. So we should not touch them. But if you find some construction company goes down, it may not be due to COVID, but it is before COVID it was there. If you ask me, construction companies which is working in, I have mentioned the civil construction which is working in industry work. For them, there is a new work will come in the case of rental housing and etc. So definitely there is an opportunity would be there. And in that case, the normal credit assessment would be there. Is it clear? So construction companies which were doing well or decently before COVID, they will continue to do that. And during this process, we can expect the people can deploy a lot of machines because of the automation part, because of the shortage of labor will force them to do these machine and deployment.
Sir, adding to it, the construction equipment companies, like people having the JCBs or the bigger constructions, the backhoes. So what is your take on this? Because we are having already one case sanctioned and it was subject to be disbursement. So when we had a word with the client and with the JCB itself, they are saying that their demand is rising because highway projects are coming up, and state projects are also there. So just to think about, going forward, what would be your take view on this particular segment?
No, absolutely. If you look at it, the demand will go up. And I think the demand will go up because the construction sector demand will go up. And only thing is that this JCB, etc., you are basically funding to JCB dealers, correct?
Yeah.
Okay. Okay. Okay, that's fine. So if you look at it, yes, you can fund that, no issue on that. But my suggestion is that we may see that some of the machines may actually become modern machines. So now for JCB running, you need human manpower and etc. Whether that dependence will go down or not, that you have to see. Maybe we can see some change in pattern of the JCB machines, etc. But definitely there is an opportunity is there.
Thank you, sir.
Thank you. Yeah.
I think you also said it rightly. This is a demand kind of a stimulus.
No, supply stimulus.
Sorry. The other way around. The supply kind of a stimulus.
Correct.
So, for example, if you take a very specific industry like auto or automobile, and I am literally 70% of my portfolio is auto ancillary. So, even if this stimulus packages, helps them, but until unless the demand for the auto picks up, how does it help the economy?
No, if you see auto ancillary, immediately we don't see much of a demand picking it up.
Right.
But we can see some of the auto ancillary may actually transform themselves apart from this into some other ventures.
So diversification.
Diversifications. And it's a high time people may go for diversifications where they can create some of the health products like ventilators. Like for example, in that case, they can go for the others also. Especially small automobile manufacturing, auto ancillary, smaller. They can actually, they will definitely diversify because right now demand will not pick up. So they will diversify. And when they're diversifying, while during the discussion, you can help them that to diversify which areas they can diversify. And second is that you have to have a close watch, especially the areas which I have mentioned, UP, Rajasthan and Madhya Pradesh now. And then you have to note that where the labor law has been relaxed. When the labor law will be relaxed, in that cases, what will happen is that these people will get into defense or some manufacturing activity which may shift from China to India. That you have to see.
But that would be
sir,
as of now wait and watch kinds.
Yeah. But I am pretty sure these people are already contemplating of doing it. So I will suggest is that you touch base of your existing client and start discussion around this angle. That what is their plan, how they are thinking. So what it will do, it will help you to actually establish the connect.
Okay.
Okay. Yeah, Manika, tell me.
Yes, sir. Where do we see the iron and steel sector, sir?
No, iron and
The
steel
small
sector.
iron and steel.
No, small. Again, I am saying small manufacturing of iron and steel. It is not because of COVID-19. Previously itself there was a problem because it's a scale game. So we don't see much of this activity coming there. Here we have to be very cautious because some people may actually leave the scene. Before leaving, they may they may actually what you do. They may actually take more money. So iron and steel, as per se, the industry will see the demand because the infra and other growth will take place. Affordable housing is also there, but smaller guy may not have a much of an action to do. So what you have to do, whatever existing portfolio, you have to have a close watch, and if they are borrowing more, then you have to be careful.
And just as a continuation to what Monica was asking,
yeah,
what about at local players? There are strong local players, right? I mean, you go beyond Tiscos and sales of the world. There will be strong local players in this segment, like the steel segment that she was referring to. So is this an opportunity for us? Because obviously the competitor banks will obviously be very tight at this point in time. So can we look at those brand names in the market, in the local markets? Can we look at those names with strong backgrounds for a period of time, or you think this is a good time to let it go and wait till the dust settles?
My personal view is that steel, especially, I would not be very preferable for the local players.
Okay.
Because why? Because the industry itself is quite risky. Because unless there is an economy of scale is there. And second, if you want to see the local players, then you have to do 2-3 things. Number one, the actual positions, because people are not having fake balance sheet, fake sales, etc.
Right.
So you have to check the fake sales very clearly. Because many of the local players I know, they generate a lot of fake sales. Okay. So this is very, very important. And if you are saying that the fake sales are not there, they have the strong collateral, long presence, you can look at it. But I will say it's not a very preferred agenda.
Okay. And another question at this point in time
yes.
is, even if we look at, some of the decent industries, I mean, if we exclude pharma as a sector,
correct,
more or less any other segment looks to be dicey at this point in time, because as you were rightly saying, the demand side of the business is an unknown factor at this point in time. We surely do not know how this opening up of lockdown is gonna play down and what amount of time it would really take for the demand to pick up. Now at this point in time, operating in SME space, everything is under multi scanners. So on the new business acquisition side, anything that you want to share with us, how we should take a view at this point in time?
Okay.
Industry agnostic. It's a very generic question that I am placing.
Yeah. So what I would give couple of pointers for the new business acquisitions. Number one is that this particular company should not be in an industry which will impact the behavioral pattern change. For example, restaurant. Suppose, for example, where large number of people used to gather to buy the industry's product.
Okay.
Now, if people are not, we can give an alternate model. Suppose consumer durables. Consumer durables, people may actually buy it, or they can have a display, and from the display, people can actually get delivered in their house. That is possible. What I am saying, not e-commerce. Suppose, for example, a brand like Bijay Sales can have a display. What is a display? They have a website and they can say, okay, this is a display is there. So if you want to place an order, please place an order. My people will home deliver it. So that is a possibility. But wherever there is a large number of people are gathering, so those segments will not be there. This is one. Second is that we must look at the promoter's equity in the business. Whether promoter's equity is really there in the business or not. If promoter's equity is there in the business, and if the leverage is around 1.5 to 2, so that means total out of the borrowing, 1 is the promoter's fund, and promoter has made of an assets, and which the asset has got some collateral or stock, bond, whatever it is, their free assets are available. Only, and promoter wants to continue in the business. This is very important I am making. Promoter wants to continue in the business, that you can look at definitely. So in that case, there should not be a problem. So promoters continuity in the business, promoters own fund, and what you look at, promoter is progressive. Promoter wants to capture this opportunity.
Right.
So definitely it's a good point, and people in the industry agnostic, you can apply that, and there's a high possibility that you'll get a good clients now. Possibilities are there.
Any particular view on I mean, we are speaking to a couple of clients. One is into the business of milk, right? And another customer, basically, they have a huge chain of thick milkshake outlets, about 100 outlets, and they do a lot of delivery through Swiggy and Zomato. These kind of customers, any particular view what do you think?
First of all is that what I have got a news is that Swiggy and Zomato sales are going down.
Yes.
Because reason is that people are getting afraid because the delivery boy is going in several places.
Right.
So what can happen is that this brand may have to develop their own delivery people. It is possible. So that is, the people who are coming to the shop, they may not come to the shop.
Okay.
So this is one. And second one is that if there is a strong band, and what you do, if they actually implement the social distancing and some concept, social distancing, putting sanitizer in the shops, if they do that, then that would be very helpful. Okay.
Okay.
So that would be there. So please keep it in mind what Chidanand has mentioned. Please remember, if your client is dealing with the customers, please check whether they are doing the social distancing, they're putting sanitizers, etc. or not. Because that will differentiate whether the customer will come or not. It's very important. So this is becoming a must questions when their customer facing is this.
Fair.
Okay.
Thank you.
Next. Any other questions? Okay. It's just a quite interactive sessions, and I think all of you have benefited out of it. So what we'll do is that we will keep on wrapping it up every some intervals about this. This is initiative taken by me, but I would also expect that at any point of time, if you feel, just drop it in the message, so we'll discuss it. And again, my personal request is that it is your effort is required, or your active involvement is required. My sincere request is that whatever the relationship managers who have been allocated the e-learning and the learning journey, you should actually push them to go through it.
Sir, I have a question.
Yeah, tell me.
Sir, I have a general question.
Yeah.
I just required your support in this. Sir,
Yeah.
of late we have there is a two-way therapy. Someone who is opting for a moratorium. Someone who is opting for a moratorium, he might be the cases might be he might be looked down upon in future. That was he not so self-sufficient that he opted for a moratorium first. The cases might vary for a term loan or for a working capital for a CC. The cases might vary, but there are many cases where the bank wants to give the moratorium, but just due to the rates going up of the overall request, we are trying to curb it down. So, sir, as far as I just wanted to know how one should look at it. If someone is opting for a moratorium, do we look down them upon as a bad customer? Might not be a bad customer, a weak customer, or a person who is not opting for a moratorium, he should be looked down as a very strong customer, because there are many good customers also who are taking this benefit of a moratorium. Now, since it is only a 10 days old story, because from 1st of June he will have to pay the entire 3 months money. So, what are your views on this? Because credit, as far as the bank's credit is concerned, if any customer is opting for a moratorium, they are not. I am very sure that going forward they will not look to enter into any enhancement kind of an arrangement with that borrower. Not in the near future. 6 months down the line, the story might change. So, what are your views on this?
No, but if you look at it, a moratorium, people who are opting for it, we cannot blanketly say he's a weak customer. Because what is happening, the customer has opted for moratorium because customer is not very sure about the future, how this will unfold it. Now, a customer which is saying that we cannot say blanketly it's a weak customer, or people who are paying in moratorium is a good customer. That is also, we cannot say like this. This can be one of the criteria, but not the only criteria. So what we expect is that this 3 months moratorium is no way here or there, correct? If customer, it should actually plan it in future, how much fund it is required. This is one. Second is that if the customer is weak or strong, moratorium can be one of the criteria, but other criteria we have to look at it. Before COVID, how they are performing. That we have to also check. So my humble suggestion is that if credit is saying that, please counter credit that this is not the only way we can check a customer is strong or weak.
Okay.
Yeah. Okay. Okay, thank you so much. And I am taking all of your active participation of your RMs. Huh?
Sure, sir.
Is it?
Yes,
is
surely.
It? Surely,
Sure,
and Puneet.
sure.
Puneet, you take the responsibility. Who have not joined, you also pass on my personal message to them. Because
Sure.
I am taking this entire project very seriously, so that after 4 months, your entire team is highly skilled and you can be easily find out in the market. And it is all your benefits. Okay.
Sure.
And thank you so much, and never hesitate to put some issues which you want to actually conduct. And we will be giving a lot of videos in our YouTube channel. Please subscribe, it's free, and you will be able to actually build up a lot of knowledge about it. Okay. And thank you so much.
This channel is already through, or you will be
It's already through. I will give tomorrow. We will give the link, and I will request each one of you to subscribe it. And regularly, you can actually listen to it, give your comment, and we can have some also periodically in a week about the topic of that week videos. We can have a general discussion. Those who want to discuss for 1 hour or 1.5 hours, people can have a discussion. We can have a discussion. So it should be meaningful thing.
Yeah.
Okay. Thank you so much.
Thank you.
And we should meet more frequently rather than a gap. Okay. Because I like each one of you. Okay.
Thank you, sir.
Yes.
Thank you so much.
Thank you.
Thank you so much.
Good night.
Thank you. Good
Thank
night.
you.
Good night. Good night. Good night.